Okay, what I'm going to do here is show you how to analyze your bank account data to predict cash flow and to budget cash flow and manage it basically. So, first thing you need to do is go to your bank account. Any bank nowadays usually has this functionality where you can go online and either copy the transaction data and paste it into Excel, or nowadays you can often download CSVs for up to 12 months of data. That's what my bank offers anyway. So you just want to get all your transactions and paste them in here, and the way it's presented for me is I've got a date, the item, the transaction type, incoming cash flow, outgoing cash flow, and a balance. I don't need the balance, so I'll get rid of that. So you want to just get a cash flow column where you're subtracting your outgoing from your incoming. So for each transaction you'll get an effective cash flow, either negative or positive. And then the next thing you need to do is categorize by account type. This isn't actually essential for what we're doing right now, but it's pretty essential for budgeting. So you need to do that. This is what I've done earlier. I should note I've modified this data slightly. This isn't strictly real transactions. So you've got your cash flow column, all your account types and all your bank data in one spreadsheet. I'm just adding a month column using a date formula to convert the transaction date to the month in which the transaction occurs. I've got another article that explains that formula. So this is once again another step forward. We've got a year column, and you can see the cash flow there, the transaction month. Just going to get rid of that year column for now. So this is the key column. This takes the month of the transaction and the account type and joins those two columns together to give you a key that we're going to use to match against the budget. And all I've done here is prepared a budget for the year. Just by each account type, by month, I've got an estimate of how much I'm going to spend. And then what I've got here is the actuals. So the actuals is just a dynamic cross tab that looks at columns G and I. It looks at columns G and I, yeah, and uses a sum if function to basically sum the cash flow for each account type and the month that account type. So as you can see, this one will use the key column to look at depreciable assets for the month of June. And by doing that crosstab thing, you can constantly compare your actual cash flows to what you budgeted. So now I'm just going to sum up all the account types. These are all in budget categories, and that's my cash flow budget for that particular month. And then do the same for actuals. So you've got two columns. You've got your cash flow budget, and then you've got your actual cash flow, and that's kind of guess the starting point for starting to look at how you're comparing against what you budgeted. But the problem with this, which we'll see shortly, is that sometimes cash flows don't occur in the months you expect them to, so you get quite volatile up and down movements, and after you process the information, it doesn't make too much sense, so it's not easy to understand how well you're doing against your budget for the year. So if I just put this in a chart, you'll see what I'm talking about. So we can see that in April, I think, it was a big negative cash flow for actuals, and then positive the following month. And there's the budget along there at the bottom. It's probably not that realistic a budget because most months are negative, but let's just imagine that's what where we're going to forecast that would happen. So what I'm going to do now is I'm going to take this data and I just need to make it cumulative for the year. And this is the best way that I found for measuring performance and managing my cash flow from one year to the next. Usually, as you get into a routine, or as I have, cash flows occur in a cyclical kind of pattern throughout the year, and 12 months is sufficient for that cycle. If you have any, and there it is, so that's the cumulative budgeted and cumulative actual cash flows. So we'll just curtail that actual to the months that have actually passed. You can get a better idea of how you're performing versus budget. To extend this further, you can look at a year-on-year analysis to see whether cash flows are cyclical and what you might expect for the current year based on the previous couple of years, based on the seasonality of months in the year. So what I'm doing now is I'm just going to create a pivot table, and I've got the month name or the month number, and then the year in column J, and I'm going to need those two columns in my pivot table. So go back to my pivot table, refresh the base data set, and you can see them both appearing there. Look at my pivot tables tutorial for more on this stuff. And then there you go, month number and year. So what I've done is basically shown the respective month number for each year. So if I just copy this, paste it below, then I'll be able to use something that Excel can build a chart with. So right now this is actuals and it's not cumulative. So that would give me the similar sort of picture we looked at earlier. So I just need to make it cumulative. And you can see the progress throughout the year of my cash flow balance in my bank account. I need to change to cumulative cash flows like I've done there, and that's the actuals chart. Just fast forwarding a little bit now, that's the cumulative cash flows chart, and you can see a bit of a trend emerging. You can get a rough idea of where the peaks and troughs are throughout the year, and you can see or get an expectation of maybe how much you expect to save or aggregate for cash flow throughout the year. Much you expect.